India's growth prospects look bright according to the World Bank's latest report. It has upgraded India's GDP growth estimate for the current financial year 2024-25 to 7% from the previous 6.6%. World Bank's country director for India said, and I quote, "If you look at India's data over the last few years, you can see a dynamic country. The story of India is a story of success despite adversaries. However, this is based on the assumption that policies and reforms continue to take place," unquote. Now, the upgrade by World Bank is a reflection of the strong performance of the Indian economy. The report noted that India was the fastest growing major economy last year with GDP growth of 8.2%, boosted by public infrastructure investment, an upswing in household investments in real estate, an improved labor market, and continuing robust services sector growth. The World Bank report says that global growth is projected to remain muted compared to pre-pandemic levels, highlighting the emergence of a more dynamic Indian economy amid multiple geopolitical challenges. Looking further forward, a positive medium-term outlook is expected, with the strong growth likely through to the year financial year 2026 at 6.7% and financial year 2027 at 6.8%. The Washington-based Multilateral Development Bank remains optimistic about India's medium-term prospects, citing robust revenue growth and further fiscal consolidation despite global economic challenges, adding that it expects private investments to gradually come in and aid the recovery of the consumption sector. The World Bank also projects a gradual decline in India's debt-to-GDP ratio from 83.9% in financial year 2024 to 82% by financial year 2027. Meanwhile, the current account deficit is expected to stay within the range of 1 to 1.6% of GDP up till the financial year 2027. According to the World Bank, there is a gradual improvement in urban unemployment, with female urban unemployment falling to 8.5%. Still, one of the biggest challenges to India's economy is job creation, with overall urban youth unemployment rate reigning high at an average of 17%. The World Bank says India should focus on labor-intensive exports to boost employment. India's high-tech exports, including mobiles and services, have grown significantly over the past decade, but the country has lost ground in low-skilled, labor-intensive manufacturing sectors like apparel, leather, and textiles. The World Bank report states that India's trade in goods and services as a percentage of GDP has been declining over the past decade. The country's share in global exports of apparel, leather, textiles, and footwear is down from 4% in 2018 to 3% in 2022. The report says India's global trade share has not kept pace with its fast-growing economy, and it is losing out to rivals like Bangladesh and Vietnam as low-cost manufacturing export hubs. The World Bank says for India to benefit from China's shift away from labor-intensive manufacturing and achieve its $1 trillion target in merchandise exports by the year 2030, it will need to lower trade costs, reduce tariff and non-tariff barriers, and revise its trade pacts with other countries.